Sanjay, a government servant, is about to retire and has experience of 15 years of investing in the market. Out of the retirement benefits that he will receive, he wants to earmark 35% for the marriage of his daughter, which is likely to take place in the next 2 to 3 years. So, where should he invest this money? Also, he wants your suggestion on investing the remaining money. The pension is likely to be sufficient for his monthly expenses.
First, the 35% for his daughter's wedding. I think look at a short-term debt fund and divide your money, divide it in 2, 3 funds equally, so that you're not dependent on one fund, definitely doing well. At the same time, choose the funds based on their credit rating, high allocation to AAA and government bonds. Don't And when choosing a debt fund, this is something which every investor should take note of. When investing a debt fund, make sure that you are not investing in the best funds of its category, because the best funds tend to be they normally tend to assume some risk, and which may not have the shown its the dark face. So you have to make sure that you're avoiding the best performers, and in terms of return. That is how you can actually avoid the risk, and look for the relatively more conservative, the funds which have higher allocation to AAA and government bonds. And remaining money, because he is experienced, he has been investing for 15 years, choose 1 or 2, flexi-cap, multi-cap funds, and be there. Because you are not going to depend on this investment for your income, and you would like to maximize your return from these investments. It should be into equity. You are very lucky to have the safety net of a pension, which will not only be if you it will also be adjusted in line with the inflation. It will keep getting revised upward. So a very fortunate situation. Make the most out of it by maximizing your return of your superannuation accumulation.